Hi, everybody. It's Greg Akagi with WIBW Radio and the Kansas Ag Network, and we're joined now by Tom Leffler of Leffler Commodities out of Augusta. You can give him a call at 866-GO-TO-TOM. And Tom, this is what we found as far as the markets are concerned after the trade on Thursday, May 13th. And I don't know if ugly is the right word to put it, but we had a major sell-off in the commodity markets that took place Thursday.
We sure did, Greg. And I actually had to look at my calendar because I thought maybe it was Friday the 13th, the way the markets reacted. And you got to admit, this is the biggest sell-off we've seen in quite some time. It should not be a surprise or shock to anybody because whether we're going up or down, markets can't continue to trade that direction forever. So we was due for a pullback. And it was a combination of the markets being overbought technically and the fact that you're also looking at the USDA numbers did not come out as bullish as what the trade wanted to see.
Yeah, and that's the thing. For as high as these prices have gone, when you get the pullback like that, that's how big that pullback's going to be, one would assume.
Exactly. And when you look at the pullback we saw in Thursday's market, it was not terrible when you consider how much upside we have seen. Wheat's probably got the most pullback out of this whole move versus the corn and the soybeans. But, even in a good, strong bull market, which this was, a little pullback like this is really good for the continuation of a bull market because it gives opportunities for people to get back in at lower levels. So there's a very good chance that this market could see some more downside, but it will eventually turn around. Keep in mind, we've got this report behind us now. We don't have to worry about what it's going to say. We're now going to be watching what the weather delivers, how the crops react, not only here in the Midwest, but also continue to watch what's going on in South America. And as always, demand is very important. And Greg, that was one thing that was a little bit negative for the report as the new crop wheat, corn, and soybean export sales were put out by the USDA lower than what we saw for this year's numbers. Like they're not expecting to see an increase in demand or even maintaining demand we've already seen this year.
And, we did have some cancellations, or we've seen these cancellations here, specifically on the corn side on exports for the last couple of weeks. But I don't think that was a huge surprise that some of that's taken place.
No, it's not a huge surprise because some of the cancellations we're seeing are old crop. So that's not really an unusual thing. It's something we kind of expect to see happen. But keep in mind, we have seen well over 3 million metric tons of corn sold to China here in the last 4 of the past 5 trading sessions. So, we're seeing all that go into new crop, which we've got a huge amount of outstanding corn export sales in the market that, will be watched closely down the road to see if they actually turn into shipments.
Tom, you mentioned weather, not only here domestically, but everyone keeping an eye on the safrinha corn crop down in Brazil, which has had its struggles and continues to have its struggles, due in part because of how late it came in and how dry it's been down there too.
Exactly. And it looks like we're going to see definitely below 100 million metric tons as far as the size of that crop. And it could get down closer to the 90 area too, which does make a difference in the world numbers out there. But, they could still get some rain that could help some of that crop still. You remember earlier this year, everybody was worried about dry weather affecting the Brazil soybean crop. That crop ended up being okay overall. Now, we probably see more damage to this corn crop down there right now than we did the soybean crop, but still, there is time to help that crop out or at least maintain some of the yields it's seeing right now.
Tom, the Wheat Quality Council Hard Work Winter Wheat Tour a little later this year. As a matter of fact, it's coming up next week. We got the USDA estimate, I think 331 million bushels estimated by USDA for this year's wheat crop. But this is also this crop is a little later than when this tour normally takes place. So I think some eyes are going to be put on what they see next week.
You've got a very good point there because there's no doubt we've got some problems like last year in the western third of the state, especially the southwest part of the state. But I don't know if they're as bad as last year. There has been some scattered rains out there that have helped spotted areas out there. I really think they're going to find a better crop than what we might worry about showing up. Keep in mind, last year, the crop just kept getting smaller and smaller, and we ended up with what, 281 million, if I remember right. So this is going to be good to see us get back over 300 million. And that's going to put a little pressure on prices out there too. Of course, we're also seeing that same week next week, numbers come out of Oklahoma to see what their crop looks like. And USDA estimated them at 108 million, which was 4 million more than they had last year.
As we look at this, Tom, two-part question. You talked about we could see more pullback as far as this market. You anticipate, is it going to be short-lived and then we're going to see it come back, or what's your gut telling you right now?
My gut, my crystal ball, all those things don't really tell me a good clue. Anything's possible. The only thing I have guaranteed for the last several weeks is volatility, and we have definitely seen volatility. So I don't really know, how much of a pullback we're going to see. I do believe we will see this market bounce back no matter how low it goes, whether we take out the highs that we've seen made last week and this week. That's anybody's guess out there. But we're pushing down to some areas of support. And keep in mind, tomorrow we have expanded limits in the corn. Instead of 40 cents, we go to 60 cents. So that's going to be most interesting to see how that turns out, whether we push this market down hard overnight or we push it down hard Friday going into the end of the week.
And one other thing too, as we look into this market here with this pullback, is that going to mean someone else is going to be driving this market of what we've seen, or could we see wheat start to drive it, or is it still going to be whenever it starts to go back up? We'll be optimistic. Whenever it starts to go back up, it's still going to be the same people that are driving the bus, so to speak.
I think it's going to be the same managed money accounts, and it's going to be the corn market that's going to be the leader. And it's going to be mainly because of what's going on in Brazil, the tightening corn supplies out there, the great demand we're seeing, especially out of China for the corn. I think corn's still going to be the leader, but we can't forget soybeans. Their supplies are still tight, even though we're not participating in exporting much right now. They're still coming out of South America, but that is still going to be a factor. And if the corn does go flying back up to these old contract highs, they could artificially hold the wheat market up despite having a good crop.
Tom, I lied. One final thing to talk about. We don't want to forget about the livestock side as well. This cattle market at the end of the day on Thursday was also very interesting on how it reacted.
Yeah, big disappointment. You would not think that you would see slight losses in the feeder cattle when you had large double-digit losses in the grain and soybean complex across the board. But we pushed this market up. We have hit levels that I think the market had a hard time justifying technically and fundamentally. And we backed off of it today with the live cattle leading that downside as we saw triple-digit losses there today. Keep in mind, back on Wednesday and Tuesday, we saw from the December 2021 live cattle contracts all the way out to October of 2022, new contract highs being made. So we've been seeing a lot of support out, or a lot of buying out there in those deferred contracts, and it was kind of set up for a pullback. We saw some higher cash start this week out, but I'm afraid cleanup trade this week is going to be lower amount of cattle moved and lower prices than what we saw earlier this week. I'm still worried about this cattle market, and I'm worried about the cattle on feed report that's going to come out next Friday, because we're going to possibly see once again a very large placement number. Matter of fact, it might be the largest in the last 26 years for that April placement time period.
All right, Tom, if anyone has any questions for you, what's the best number they can call you at?
They can get us toll free on the phone or get us on the internet, either one, by using 866-GO-TO-TOM.
All right, Tom, I appreciate it. Thank you very much.
Thank you, Greg.
That is Tom Leffler of Leffler Commodities giving us analysis on what happened in the May 13th Thursday markets.